Welcome back. I really appreciate you joining me for Money Girl episode 876. I'm Laura Adams, an award-winning author, finance spokesperson, money speaker, founder of The Money Stack, a Substack newsletter, and host of Money Girl with over 43 million downloads. Today, I am so excited to be joined by two special guests to discuss how to get top-notch education, support, health insurance, and other benefits when you work for yourself. Whether you or a loved one earn part-time income from a side hustle, or you're a full-time founder or freelancer, don't miss this episode. You'll get valuable tips and resources for cutting costs and up-leveling your self-employed benefits. You'll hear my conversation with Tom Morrissey, founder and CEO of Healthy Business Group, HBG. That's the company behind Solo Health Collective, an innovative health plan designed for solo business owners. With over 35 years of experience in the health insurance industry, Tom's passion is giving solopreneurs and small business owners more control over their health plans and expenses. And I'm also thrilled to be speaking with Rafael Espinal, Executive Director of the Freelancers Union, a nonprofit organization that supports independent workers through advocacy, education, and services. Rafael has an impressive background and was New York's youngest elected official when he joined the state assembly at age 26. He's a former New York City council member and has been a steadfast advocate for freelancer rights throughout his career. As you'll hear in today's interview, Tom and Rafael have partnered to help freelancers establish a health plan and take control of their healthcare spending. Both are very knowledgeable and enthusiastic about making benefits more accessible and affordable for businesses of one. In my interview with Tom and Rafael, we talk about why there's been an explosion in the number of freelancers, the biggest challenges freelancers face, and resources the Freelancers Union offers to overcome them, who qualifies for a solo plan, and other choices business owners have for getting an affordable health plan, when and how to compare policies when you're shopping for a health plan, plan options including HSA-eligible choices that you can get year-round, and a lot more. I hope you enjoy our conversation. Tom and Rafael, thank you so much for joining me on the Money Girl podcast. I am super excited to talk to you guys today about self-employment, health insurance, benefits, all kinds of good stuff.
Great. Thanks for having us, Laura. Great to be here.
Yeah, let's start out. Rafael, I'd love to know a little bit about you. What's the origin story of the Freelancers Union? Tell us a little bit about what you do, how you got started. I'm kind of fascinated about how you started this union and all the great things you're doing.
Yeah, well, my story is a little different than the unions. I actually am the third executive director of the organization, and it was founded back in 1995 by this woman named Sarah Horowitz, who at the time foresaw a seismic shift in our economy. She noticed that the traditional workforce was transforming and more Americans were turning to independent work to make a living. And with that change on the horizon, she envisioned an organization that would support the unique needs of freelancers, kind of like a traditional labor union, right? So it's a community that could provide not just resources, but also a collective voice for independent workers. Her goal was to ensure that independent workers had access to a broader social safety net to protect them from issues like exploitation and provide them essential benefits they needed, like truly affordable healthcare, hence our partnership with Solo. And today we've grown to about 500,000 members nationwide, and we advocate for the needs of 60 million Americans engaged in some form of independent work. So for us, a freelancer is the entrepreneur-minded individual. It's the founder, the creative worker that are using their skills to build a roster of clients, or the person picking up extra work on nights and weekends to support their income. So essentially, it's anyone who takes control of how they're earning a living. So as a nonprofit organization, we provide a comprehensive suite of services and resources. This includes access to affordable health insurance plans, retirement options, and educational materials designed to help navigate the complexities of being a self-employed person. We also cultivate community through meetup groups where freelancers can connect and collaborate. And on the advocacy front, which is where my history is from, I am a former New York City legislator. Our work aligns with, again, my history, and we push for policy changes like the Freelancers and Free Act the first of its kind legislation that provides non-payment protections for freelance workers. So to sum that all up, I would say our mission is very simple, but it's also incredibly powerful, and it's to ensure that being independent doesn't mean being alone or having to work alone.
Wow, I love that. There's so many people that need the services that you're offering. And I love the fact that more and more people are getting into self-employment, whether it's part-time or full-time. It really is becoming a source of security for a lot of Americans. So that's terrific. So Tom, you're on the insurance side of this. And so I'm so excited to talk to you guys together because you're kind of one piece of what the Freelancers Union is offering, a really, really important piece, in my opinion, because I do think that a big challenge when folks get into self-employment and maybe they want to leave a day job, it's, oh my gosh, how am I going to insure myself and my family? And I think a lot of people don't realize that they have a lot more options than they may think. From your perspective, how did HBG Solo begin? You're part of a bigger company. I'd love to know, your origin story and how the solo part of this came into being.
Sure, Laura, and thanks again for having us. This is my second time with you. We were here last year at this time introducing Solo, which was brand new at the time. So we're a year in. We've learned a lot along the way. And we're really excited to be part of the Freelancers Union offering. And as you said, there are many different options with the Freelancers Union. The freelancers for a long time have been, I think, the ones that have gotten the short end of the stick, if you will, with respect to benefit offerings. Up until recently, really, it's really just been the ACA, the marketplace exchange plans that have been competitive. They're even more competitive for at least the time being for 25 with the advanced subsidies that are being offered. But Solo is one of a few options. I'd like to talk a little bit about that. But a little bit about me. I'm a 25-year veteran of the large employer platform for health insurance. I worked for Cigna for most of my career, 25 years. And then I started a company 12 years ago, Healthy Business Group, which is the owner and operator of Solo. 20 to 24 months ago, we really saw an opportunity where we started to recognize was the growth in the independent worker variety, if you will. A lot of people were leaving their jobs during COVID, roughly 60 million freelancers out there. So we just saw this as an opportunity to create a program that would be very different from what everyone else is offering and make it compelling. And that's what we've done with Solo Health Collective.
I love that. Yeah, as you mentioned, there's so many more self-employed people. The stat I have is that in 2020, there was a 25% year-over-year increase in new businesses. And then in 2021, we saw another uptick. We saw a little bit of a slowdown in 2022, but now we have another increase in 2023. I mean, we have a record-breaking 5.5 million folks that have started new businesses. This explosion really has, I think, highlighted the need for good benefits for people. It is such an area of need, the service. So I'm super excited to dig into it. I know you guys did a study at the Freelancers Union about 60 million. This is like 35% of the workforce, if my math is right. Tell me a little bit about, why you think this economy has grown so much. What is at the heart of this big surge in freelance work?
Just to call back the study you mentioned, when we ran that study, it did reveal some unsurprising but impressive insights, right? That the freelance world continues to show, and it shows that it continues to grow. Right, as you mentioned, over 60 million Americans, 35% of the U.S. workforce, engage in freelance work. But what we found even more striking is like the financial impact that freelancers have on the country's overall economy, contributing. They're contributing over $1 trillion to our country, and it shows a significant shift in how work is being redefined. Right, freelancers are no longer just the side hustlers or the gig workers, right, filling the gaps in services. They've become a substantial and integral part of our economy. The study also highlighted that more people are turning to freelancing, by choice, right? because of the flexibility, the autonomy, and the opportunities it provides. For example, women we found have reported being able to climb the economic ladder at a much rapid pace, because when you're working for yourself, issues like childcare become less burdensome in your ability to climb the economic ladder. They also deal with less office politics, like not getting paid what they're worth or having to compete in a male-dominated environment, which again, we credit freelancing to being able to close the wage gap, the gender wage gap as well. The explosion you mentioned that happened since 2020, it really all started because of the COVID-19 pandemic, or I should say the COVID-19 pandemic lended to that explosion, right? We had traditional workers who got a taste of what it's like to being a freelancer, right? They got a taste of the benefits of being able to work from home, being able to create time in their day to spend time with their family or deal with other issues that they're encountering. They've taken in, a leap of faith since that time on themselves. And that's what's further driving that trend. And we've seen this before, right? It's not new. It's new in how rapidly it's happening now. But even back in 2008, during the Great Recession, there was also a huge uptick around that time. So times of economic downturns creates opportunity for people to really rethink of how they want to create a livelihood for themselves.
You mentioned a lot of great benefits of being self-employed. What are the downsides? What are the challenges that you're seeing from the freelancers in your union, your members? What kind of services are you helping them? What challenges, are you helping them overcome most commonly?
With all the positives that come with being a freelancer, you can argue that just as much negatives. It's not all roses. I can't stress enough that in 2024, it's still very difficult to be an independent worker in our country. Income instability is a big factor, especially if you encounter, non-paying clients, which over 70% of freelancers reported that they do. There's an obvious lack of access to affordable healthcare, the absence of traditional work benefits like unemployment insurance when you're out of work, or paid leave if you take time off to care for a loved one, which is where, our organization comes in, which is where the Freelancers Union tries to fill that gap. And the private partnerships we build with companies like Solo Health, we work together to ensure that we're building those resources so that those negatives don't hurt as much, or that we are able to fill the gap those negatives are creating. So we also run a free co-working space thanks to a partnership we have with the city of New York, where you're able to leave your home and book a free desk in a professional work environment for free. We also launched a free legal clinic this year where you're able to get free consultation with an attorney, because we know attorney consultations can be very expensive, especially if you're just starting out as an independent worker. We host monthly meetups where independent workers are able to come together, build community and network so they can help grow their own businesses. So we're doing a lot of that work to ensure that those negatives do not become a hindrance in your ability to grow as an independent worker and for you to be able to succeed in our country working for yourself. So we take this work very seriously.
So, Tom, getting back to the health piece of it, what would you say are the most popular choices that solo business owners have when they're looking to get insurance? Let's say they've left a day job and, they're no longer eligible for a group health plan. Now they're on their own. What are some of the things they need to think about? What should they be comparing in terms of their best, most affordable healthcare options?
There are numerous options. And obviously, since we've got Rafael on the podcast with us, let's talk about the Freelancers Union offering. Second to none for independent workers. We are extremely pleased to be part of it. I can tell you that Rafael and his team kicked the tires pretty hard on Solo. We are relatively new, as I mentioned. So the trust factor needed to be there. And after a number of different meetings and phone calls, establishing our program within their framework happened. And we're, again, very pleased to be partners. If you're not a member of Freelancers Union, you're welcome to get on the freelancersunionn.org website to check out what's available. The first thing you'll see on that homepage, freelancersunionn.org, is at the top of the page, top banner, click on it. It's the brand newly released Freelancer's Guide to Health Insurance. I would just tell you to start there. At Healthy Business Group, again, the operator of Solo, this is my company. I want to give a quick shout out to my team. They've done extraordinary work in getting us prepared for 1/1. We are all about helping the freelance member. The member of the union, whether you're a member or not, right now, doesn't matter. You can check on the site, you can become a member very easily, and just go through the guide. The guide will start with showing what the options are. The key options are ACA, the exchange plans, the state or federal exchange plans. Freelancers Union has partnered with what I think is a really cool company, relatively new as well, but they're really an engine to allow Freelancer Union members to jump on catch.co and explore what's available to them as far as what the ACA or Obamacare plans in their state are doing. Really easy to use. It very intelligently tells you what you might be eligible for a subsidy once you put in your expected income. So a great place to start as a benchmark to find out what's available, how much that's going to cost, and what your subsidy may or may not be. The other options under Freelancers Union, there's a program called Opolis, which is really a cooperative program where you've got available, I want to say 6 different plans from 2 different carriers. Good plans, unique offering, just like Solo is unique. I would say Opolis is unique, and you should go check that out. And then finally, they have Galileo, which is it's not comprehensive care, but it's for those that aren't prepared yet really to get full-blown health insurance, but need an option to cover some of the services. All of what Galileo does is virtual. I'm a member of Galileo. I love Galileo. And I hope everyone listening to this podcast, whether they're a Freelancers Union member or not, doesn't matter. You need to think about all of your options. They're all very separate. They're all distinct. What I can tell you what Solo is not. The Solo is not an ACA plan. It's not a individual health insurance plan. What Solo is doing that is highly differentiated in this market is what Solo is doing is taking your business. You're a business of one. You and your family can put themselves on Solo by establishing your own healthcare account through your business. You must have a federal tax ID number and EIN. But what's special about Solo is, again, it's a form of business insurance. It's available to you now. We ask for demographic information, age, gender, residential zip code, and then we ask medical questions. And so if you can get through the medical questions with ease, you're going to find yourself quoted for specifically for your demographic and your health history, a plan from Solo, very simple. The plan designs are simple. There's only three plan design offerings, and they're only differentiated by the deductible on the plan. We have 3 deductible offerings, $2,500 deductible, a $5,000 deductible plan, and a $10,000 deductible plan. Those are the individual deductibles on those 3 plans. And if you have a family, whether it's a spouse that is joining you on the plan as a party of 2 or a multi-member family, the family deductibles are always 2 times what the individual deductible is. So obviously, the $2,500 deductible is popular with us. The family deductible on that plan would be $5,000. Further, in keeping it simple, which was the whole idea as we formed Solo, it was to go so low in cost, offering a ton of service and simplified plan design. So with Solo, those deductibles I mentioned, that is your maximum out-of-pocket cost. Once you've reached your deductible with Solo, all of the covered expenses on the plan are covered at 100% after your deductible. There is no coinsurance. When you're comparing Solo to, let's say you're in the catch system and you're looking at what the ACA plans are now, it's important that you know your out-of-pocket is the same as your deductible. And with Solo, and as soon as you hit that, you're at the 100% stage. Further to that is that 100% of preventive care is covered in full at 100% no deductible. We follow the ACA guidelines for that. That's to keep it simple. This is not an ACA quote unquote compliant plan, as I mentioned. For ease of use and simplicity, we're simply following the preventive care guidelines in the ACA. So as you compare yourself to the ACA plans, it's important that you really learn what your maximum out-of-pocket cost is. I'll give you a real case example, one that we actually wrote yesterday. A new Solo member, Allie, on our team, talked through this with this gentleman. He's a 35-year-old male in New York City, residential real estate, who has an EIN. And as I mentioned the EIN number, it's very easy for you as a freelancer to get an EIN for your business. It's free. It's on the government website. There's companies out there that charge for this. No use in doing that. We can point you in the right direction if you set up a support call with us, but it's very easy to do. And in fact, on the Freelancers Union website, they have a blog out on the importance of a freelancer getting an EIN number to protect his social security number, et cetera. Once you know your out-of-pocket costs on the state exchange plans, that's going to be your deductible, and your out-of-pocket maximum cost should be identified. This individual was on the $2,500 plan for solo. I want to say he was at $350 a month maximum cost. That maximum cost, it includes all the expenses on the plan, your expected claims, the maximum claims. That's the most you will pay. That $350 rate is the most you'll pay. That is compared to a silver plan on the New York State Exchange. Didn't use catch.co because they're not available till the 28th with the new rates. But the New York State Exchange is available. Those rates were in the $800 range. So this individual was saving $500. He was getting a modest subsidy. The subsidy, I wanted to say he was making about $125,000 a year. That gave him a subsidy of about $10 a month. So we were saving him more than $500. But what I want to emphasize is that's the rate savings. The plan design savings, the out-of-pocket differential on that plan is $8,000 versus ours was $2,500. So there's another $5,000 this individual picked up in potential out-of-pocket cost savings for 2025. Now, that's not going to happen for everybody. That's why I'm telling your listeners, Laura, that they should look at all of the options. You owe it to yourself to find out what the state's got available to you. I would warn you that some of those plans are really skinny down HMO networks, and they're lock-in networks where Solo is on a PPO platform. We actually use the multi-plan PHCS network, along with the ability to have our members go to any doctor as long as they're willing to accept the payment schedule from Vault, who's another partner with Solo. Again, very important you know what your out-of-pocket costs are. So the real savings is, what is your premium savings? What is your out-of-pocket cost savings on plan design? Those two really need to be summed up. A little bit, if I may, on subsidies. Subsidies are important. There are 90% of the people buying marketplace exchange plans on the ACA are getting subsidies. There are big subsidies available. Anyone 400% of the poverty line or lower is getting a significant subsidy. And even people that are above that don't have to pay any more than 8.5% of their earned income. The comparable plan on the ACA is the second least expensive silver plan on the exchanges. That is what they base your subsidy on. So as I mentioned, even the guy that was making $125,000 a year was getting a small subsidy. If that individual that we put on the plan yesterday was making $75,000, the subsidy for him would have been $350 a month, not just $10 a month. He's not making that, so 75, and then going lower, if he was only making 40,000, the subsidy is around $600 a month. That's one thing that is definitely on the ACA. That's to the ACA's advantage that they're giving an advanced premium tax credit. But you should be careful with this, because while it's an advanced premium tax credit, it's no different really than if you're buying a solo plan, because the entire rate or the maximum cost that solo costs you a month is fully deductible at year end on your taxes. So the subsidy is an advanced premium tax credit where you're getting the write-off anyway. It's just a delayed premium tax credit is how I like to refer to it. So you've got to really understand what all your options are.
Yeah, I always say the best defense we have as consumers is shopping, right? Shopping and comparing. And I do think health insurance is a little tricky when we talk about comparing because of all of the factors that you mentioned, Tom. You've got folks that can help walk people through this process and maybe help them do a little bit of this comparison if this is new. But yeah, I think getting down to what is that total out-of-pocket number, you need to spend a little time on that for sure. Just do the best that you can, making an apples-to-apples comparison, and also talking about the subsidies. You know, I know a lot of people who will underestimate, underreport their income, you know, in order to think, well, I'm going to get this great subsidy. And then come tax time, they're not realizing that that's going to be trued up with the government based on their actual income. You don't want to play games with that. You want to really be as close as you can when estimating your actual income for the year to make sure you don't have any tax surprises when the next tax bill rolls around. Let's talk about the time to shop. Rafael, we're in the open enrollment season right now. It started November 1 for the ACA plans. That runs through January 15, although you do have to get a plan before December 15 if you want the plan to start on January 1. So we're in this time where folks have a window to shop and compare. What tips can you give people for going through this if maybe they're just starting from scratch? And also, do you recommend people shop each year? Maybe they got a good plan last year, but should they still shop again this year?
It's always a good time to look at what options are out there, especially if it's saving you money. So I encourage anyone and everyone who is looking to save money, wants to see what the market is offering currently, take a look, but most specifically, take a look at what we're offering at the Freelancers Union website, right? Because we've done the work for you already. As a nonprofit, our mission is to ensure that we're providing you with the best tools and resources that exist out there to help you succeed, right? So, Tom mentioned earlier, he did a great job at outlining our resources, especially when it comes to healthcare. We've created the Freelance Health Insurance Guide, which will walk you step by step on how to navigate the marketplace, what some of the terminology means, and also what plans we're offering. It's always a good time to buy health insurance. As you mentioned, Laura, open enrollment is that time, right? So you do have from November 1st to January 15th each year. It does vary. It's to state by state, right? Because some states do control their marketplaces. For example, in New York and California, you may have till January 30th. And we've seen in previous years where they might even extend that deadline, right? But why wait? Depending on when you buy your insurance, whether it be in December, as you mentioned, it does start, or in January, it does start usually the first day of the following month. Go out there, do the homework. But again, on our website, we are I think, offering the best options and the best tools available out there. We do have Catch, which simplifies the marketplace for you, right? So if you're looking for that traditional health plan and are wondering what sort of subsidies exist for you there, you can just easily go on our website, freelancersunion.org/health, and you can type in your zip code with your demographic information, and it'll break down the marketplace within your state while also aligning the cost savings. But then, of course, if you're looking for something new, something that is going to save you an extremely amount of money, right? If you don't qualify for those top subsidies, we do encourage you to look at Solo. This is the first time, right, in my time in the organization, or I think as an organization as a whole, historically, where we've partnered with a national carrier like Solo to provide a plan to freelancers across all 50 states. So we're really excited about this partnership because we know that at the end of the day, it's going to set you up to succeed financially, but also ensure you have the coverage you need to care for yourself and your loved ones.
Tom, I want to go back to the plans that you offer. Are any of them HSA qualified? I know a lot of people love their HSA.
I'm glad you brought it up. Thank you. Yes, I should have mentioned that, but the $2,500 version and the $5,000 version of our plans are both HSA compatible. The only reason $10,000 is it's a government regulation that deductible is too high or the out-of-pocket's too high, but those two plans do. And another plug for the Freelancers Union. They partner with Lively, which is a great bank for HSA coverage. You can easily buy Solo, then tap into Lively at the Freelancers Union website, and you'll have a great setup with a health savings account teamed with your high deductible plan with Solo.
Let's go back and talk briefly about a self-funded plan. This is maybe a new terminology for folks that are listening. So, Tom, I would love for you to just explain that and how that compares to a fully insured plan or even a healthcare sharing plan, which may be all terms folks have heard.
So again, what we're not is we're not an ACA plan. It's not a government compliant plan sold on the exchanges. It's also not a sharing plan like a ministry plan that you hear a lot on commercials these days. Candidly, if you want my advice, I would tend to stay away from those. But the more comprehensive plans that are available on the freelancer site is where I would direct you. Yes, Laura, you hit it on the head. Solo is unique. And again, I've said it, but I want to say it again. Not ACA plan. It's not individual health insurance. This is business insurance. You're a business owner. You're a freelancer. You're running your own business. You own a business and you have every right to set up your healthcare on your business, just like an employer, just like Google does for their business. They set up a business plan and they have hundreds of thousands of employees on their benefit plan. What we're doing is we're availing freelancer members to set up their business using their EIN on its own, establishing its own plan. You use the word self-insured. This typically what is considered self-insurance, but I don't want people to be scared by that terminology. It's a matter of semantics. It's really the industry nomenclature for employer-funded plans. Most of those are self-insured because they're large. We're a large collective, but each individual is self-insured. Again, shouldn't scare you. Even more industry nomenclature would be that we're on what's called level funding. So the only difference between level funding and traditional funding, which is how you fund ACA plans and other individual health insurance plans, that's just called traditional or guaranteed cost funding. The self-insured part of this plan is based on the maximum cost. As I said earlier, the maximum cost is your max rate. It's the most you'll pay. It's just like paying a health insurance rate. It's all of the fees, the stop loss insurance premiums, your claim liability, all wrapped up in one payment into HBG, and we pay our partners with that. The upside to this, there is no downside. Members can be secure and feel comfortable that they're buying a program with a lot of power to it because we're reinsured by a company called Odyssey Re, which is an A+ rated company on Standard & Poor's and AM Best, which is the organization that rates insurance companies. So Odyssey Re is top of class A+. They hold all of the stop loss insurance. So if for whatever reason, if our total population started running poorly, they're on the hook. We pay them a premium to Odyssey Re to cover the claims that are in excess of certain levels. That's the self-insured nature of the program. There is no downside. Upside is each member of Solo Health Collective is a pro rata member of the captive itself. That means they're owner members of the captive. That's how this works. The max cost covers your worst case scenario. That's the most you'll pay for the plan. But the good news is, and we expect this to happen year in and year out, because we're going through demographic information and going through a medical history questionnaire and underwriting each business of one by itself, they roll up to a total umbrella. To the extent the overall experience of the plan runs well, and since we're asking those questions, it will tend to run better than plans that don't ask such questions. Plans like the ACA plans that are required to cover all pre-existing conditions, they tend to run a little hotter than plans like ours because we are taking like-minded people, healthier people, people that haven't had a rough medical history are getting on our plan. That means that at the end of the day, there's more than likely surpluses at the end of the year. By law, those surpluses have to be redistributed back to our captive members. That's not done in cash. That's done in the form of dividends like plan design changes where we'll increase plan design and make plan designs better. It might be to offset a renewal increase. Like if the plan needs 5%, we might use the 10% surplus we had in claims to offset the rate increase. This plan is governed by the North Carolina State Insurance Department's captive division. They are in partnership, or I should say Vault, our captive partner, has the relationship with the captive insurance DOI. It's all regulatory, it's all compliance-based. So the ownership and the upside, if you will, of being self-insured is all by contract with the state of North Carolina.
Wonderful. These are such amazing resources and services that you are both providing for freelancers and also for solo owners. I want to ask you guys, what are some final thoughts, maybe some final tips if someone is listening and thinking, I really want to start my own business, next year, or maybe I already have, but I'm uninsured. Maybe they haven't taken that step, or maybe they have insurance that is just not affordable right now. Tom, what do you think is the next step for somebody in that situation?
learn all about everything that's available to you at the Freelancers Union. Wide variety of plans available. Taking it to the next step, though, my company, Healthy Business Group, just signed a deal with a concierge service called TouchCare. TouchCare has health plan concierge folks on the ground who can answer any questions, both to prospective solo members and then ongoing solo members. On a prospective side, effective November 1st, through our website and through the Freelancers Union website, there'll be a spot for you to reserve up to a half-hour call with TouchCare. They're a carrier-agnostic subject matter experts that can help you. You'll get a half-hour complimentary phone call with them. If you have all your ducks lined up, like you've been through Catch.co, you've been through Solo, you're seeing, wow, there's something that really interests you on the ACA through Catch, and maybe you're interested in Solo, they can help you make the decision. If you become a Solo member, effective, call it January 1, beginning January 1, you have unlimited access to, as a Solo member, the TouchCare concierge to make doctor's appointments for you, handle any billing problems you might have, get an MRI scheduled. Let's say you have an orthopedic surgeon wants to see what's going on and wants an MRI ordered. They help with everything you just don't like doing. We all know this is not fun, right? Health insurance is for the birds. Somebody's got to do it. That's what we do. But TouchCare is a great way to go in terms of getting questions answered. As long as you're a solo candidate, you can use that service to help you through that.
Yeah, it's an amazing service. I think we all can agree that time is money, especially when you're a freelancer, right? And every hour you can save, cutting your time and figuring out what's best for you or your business, that's money that can go back into building your client base and doing your work in order to ensure you're bringing in the money you need.
Absolutely. Rafael, any final thoughts or tips for existing freelancers or potential freelancers who might be listening?
We covered it a lot, but so I just encourage everyone to check out our website, freelancersunion.org. We have everything there from freelance 101 guides that can walk you through everything from creating an LLC, the importance of having different types of insurance. We do offer health, but we also offer other types like liability, long-term disability, life. Encourage you to check us out. We're also on social media, Instagram and LinkedIn, Freelancers U, and we're always on standby. So any questions you have, you can always email us at advocacy@freelancersunion.org, and someone from my team will get back to you on any questions or concerns you may have through your freelance journey.
Thank you so much. I really appreciate you both. This has been such great information. This is going to be very helpful for a lot of people.
Great, Laura. Thank you. We appreciate you too.
Thank you.
A big thanks to Tom and Rafael for coming on the show and the work they're doing to support solopreneurs. If you're getting value from the free content we love creating here on Money Girl, please subscribe and consider submitting a 5-star rating or review. That's all for now. I'll talk to you soon. Until then, here's to living a richer life. Money Girl is a quick and dirty tips podcast, and we have an amazing team. I want to thank Steve Rickyberg, who audio engineers the show. Brandon Gachis is our director of podcasts. Holly Hutchins is our digital operations specialist. Morgan Christensen is our advertising operations specialist. Davina Tomlin is our marketing and publicity associate. And Nathaniel Hoops is our marketing contractor.